Good afternoon, all the members and ICA Saurabh Sikasa, Chairman of Gautam Buddha Nagar branch of CIRC of ICI. Welcome all of you on today's webinar on review of corporate financing and credit control for members in industry and business, organized by members in industry and business committee. The committee organizes key initiatives such as CFO forums, executive development programs, residential refresher courses, industry webinars, CPE study circles, global CA industry connect 40 under 40 awards and ICI awards aimed at promoting knowledge sharing, leadership development and excellence amongst members in industry and business. I welcome CA Anuj Goyal sir, who is the chairman of this committee. I read brief profile of Anuj Goyal sir. CA Dr. Anuj Goyal sir is Central Council member of the Institute of Chartered Accountants of India, has over 30 years of experience and has made significant contributions to the profession with his extraordinary tenure of 20 years in the Central Council. He has held key leadership roles including chairman of regional and central committees and currently serve as a chairman of the members in industry and business committee. So I hand over the mic to Anuj Goyal sir. Sir, Anuj Goyal sir, over to you sir. Thank you sir.
Thank you very much. I am really very happy that we are having this very important webinar on this very important topic, review of corporate financing and credit control. We are having our very prominent resource person, CA Nilesh Sanghvi from the financial capital of the country, Mumbai. Welcome Nilesh on behalf of ICI and on behalf of the committee members in industry and business. We are having the presence of CA Rakesh Vasneji, very senior and very prominent chartered accountant. And I think before I will start, I will request CA Rakesh Vasneji for his opening remarks, and then I will, of course, try to discuss the things with you. Over to CA Rakesh Vasneji, who is the very prominent chartered accountant and is the vice chairman of Gautam Buddha Nagar branch of Central India Regional Council. Over to CA Rakesh Vasneji for his opening remarks.
बहुत धन्यवाद सर। सभी को सायंकालीन शुभकामनाएं। मंच पर बैठे हुए आईसीआई परिवार के उन विशिष्ट व्यक्तियों में से एक जिनकी विद्वता, नेतृत्व क्षमता, कार्यनिष्ठा और सदस्यों के प्रति समर्पण हम सभी के लिए एक प्रेरणा का स्रोत है। आईसीआई को नई ऊंचाइयों की ओर अग्रसर करने वाले दूरदर्शी, प्रेरणादायी नेतृत्व के ध्वज वाहक, ऊर्जावान मेंबर्स इन इंडस्ट्री एंड बिजनेस कमेटी के यशस्वी कर्मयोगी चेयरमैन, ज्ञान साधना एवं व्यावसायिक उत्कृष्टता के सशक्त प्रेरक, आपके अथक परिश्रम, ज्ञान की गहराई और नेतृत्व की ऊंचाई और सदस्यों के प्रति आत्मीयता ने एमआईबी कमेटी को एक नई पहचान दी और नई दिशा प्रदान की है। ऐसे यशस्वी, कर्मनिष्ठ, प्रेरणादायी एवं सम्मानीय चेयरमैन डॉक्टर सीए अनुज गोयल जी, हमारे सम्मानित वक्ता सीए नीलेश सांघवी जी, हमारे बड़े भाई सीए हिमांशु जी, अंकित गुप्ता जी, सौरभ गर्ग जी तथा देश भर से जुड़े हुए सभी सम्मानित स्वदीय बंधुओं को मेरा सादर प्रणाम, साधुवाद। आईसीआई की मेंबर्स इन इंडस्ट्री एंड बिजनेस कमेटी की ओर से मैं आज सभी प्रतिभागियों का आज के वेबिनार रिव्यू ऑफ द कॉर्पोरेट फाइनेंसिंग एंड क्रेडिट कंट्रोल फॉर मेंबर्स इन इंडस्ट्री एंड बिजनेस में आप सभी का हार्दिक स्वागत, इस्तकबाल, अभिनंदन करना मेरे लिए अत्यंत हर्ष और गौरव का विषय है। श्रीमद् भागवत में एक अत्यंत ही प्रेरणादायक संदेश है जो हम सभी चार्टर्ड अकाउंटेंट्स के लिए व्यावसायिक जीवन का मूल मंत्र भी है। योग है कर्मसु कौशलम, अर्थात हम अपने कार्यों को उत्कृष्टता के साथ करना ही योग्यता है। आज के गतिशील व्यावसायिक परिवेश में प्रभावी वित्त पोषण निर्णय, सुदृढ़ क्रेडिट नियंत्रण तंत्र, वित्तीय स्थिरता सुनिश्चित करने एवं नकदी प्रवाह को बेहतर बनाने और सतत विकास को समर्थन देने के लिए अत्यंत महत्वपूर्ण है। वित्तीय पेशेवर के रूप में हमारे लिए यह आवश्यक है कि हम वित्त पोषण के बदलते परिदृश्य को समझें, क्रेडिट जोखिमों का प्रभावी प्रबंधन करें और ऐसे वित्तीय प्रक्रियाओं को अपनाएं जो संगठनों की मजबूती और दीर्घकालिक सफलता को सुनिश्चित करें। आज का युग निरंतर परिवर्तन का युग है। नियम बदल रहे हैं, तकनीकियां बदल रही हैं, ऑडिट की कार्यप्रणाली बदल रही है। ऐसे समय में एक बात सदैव प्रासंगिक रहती है, विद्या धनम सर्वधन प्रधानम, अर्थात ज्ञान का धन सभी धनों में श्रेष्ठ है। इसी ज्ञान की साधना और व्यावसायिक उत्कृष्टता की भावना को आगे बढ़ाने के लिए ICAI निरंतर प्रयासरत है। मेंबर्स इन इंडस्ट्री एंड बिजनेस कमेटी द्वारा आयोजित यह वेबिनार उसी दिशा में एक सराहनीय एवं सार्थक पहल है। स्वामी विवेकानंद जी ने कहा था, उठो, जागो और तब तक मत रुको जब तक लक्ष्य की प्राप्ति ना हो जाए। यही संदेश हम सभी पेशेवरों के लिए उतना ही महत्वपूर्ण है। निरंतर सीखना, स्वयं को अद्यतन रखना और अपनी क्षमताओं को निखारना ही सफलता का मार्ग है। मुझे पूर्ण विश्वास है कि आज के हमारे विद्वान वक्ता CA नीलेश सांघवी जी अपने समृद्ध अनुभव एवं गहन विषय ज्ञान से कारपोरेट वित्त पोषण रणनीतियों, क्रेडिट प्रबंधन की सर्वोत्तम प्रक्रियाओं और जोखिम न्यूनीकरण के विभिन्न पहलुओं पर अपनी मूल्यवान जानकारी प्रदान करेंगे। मैं सभी प्रतिभागियों से अनुरोध करूंगा कि वो पूरे मनोयोग से इस सत्र का लाभ उठाएं और अपने प्रश्न और ज्ञान यज्ञ में सक्रिय आहुति प्रदान करें। इन्हीं शब्दों के साथ मैं पुनः सभी गणमान्य अतिथियों एवं प्रतिभागियों का हार्दिक स्वागत करता हूं और इस कार्यक्रम की सफलता हेतु अपनी मंगल कामनाएं व्यक्त करता हूं। धन्यवाद। जय हिंद, जय CA, जय ICAI।
Thank you very much, Sri Rakesh Vasneji, for your kind words of wisdom and your opening remarks. So I'm really very happy. I'm Sri Dr. Anuj Goyal. I'm the chairman of Committee for Members in Industry and Business. I'm really very happy that today we are having this very, very important webinar on the topic review of corporate financing and credit control for members in industry and business. We are having the presence of our very, very prominent resource person, Sri Nilesh Sanghvi ji. We are having Sri Rakesh Vasneji, who is the vice chairman of Gautam Buddha Nagar branch of ICAI. We are having the presence of our very, very prominent chartered accountant, Sri Saurabh Garg, who is Sikasa chairman of Gautam Buddha Nagar branch, the moderator of today's webinar. We are having Sri Ankit Gupta ji, the secretary of Gautam Buddha Nagar branch, and on my right we are having Sri Himanshu Agarwal ji, our very, very senior and prominent chartered accountant, and was the part of the bigger entities of the chartered accountant firms, and now he is practicing at his own. And all the respected delegates from each and every part of the country and outside country. We are having CA Anita Suneja ji, our secretary of Committee for Members in Industry and Business. Very, very good evening to all of you. I'm really very happy that today we are having this very, very important webinar. We are very well aware that every week we are having one or more webinar to see that how we can outreach to the chartered accountants, and particularly to the members in industry and business. We are at present are having more than 60% of our membership in industry and business, and our younger generation of the chartered accountant, I think more than 80% of my chartered accountant are joining industry. Friends, today's topic, I think it is very, very important, and this insightful webinar on review of corporate financing and credit control is very, very important for members in industry and business. Corporate financing and effective credit control are fundamental pillars of a financially sound and sustainable business. In today's dynamic economic environment, organizations must continuously evaluate their financing strategies, optimize capital structures, and maintain robust credit management practices to support growth while safeguarding financial stability. With increasing market volatility, evolving regulatory expectations, and heightened focus on risk management, the need for sound financial planning and disciplined credit control has become more important than ever. For chartered accountants working in industry, a thorough understanding of corporate financing and credit control mechanisms is very, very essential. It provides valuable insights into funding options, working capital management, credit assessment, receivables management, risk mitigation, and governance frameworks that support informed decision making. Such knowledge enables finance professionals to contribute effectively to business growth, enhance operational efficiency, and strengthen the financial resilience of their organizations. The objective of today's webinar is to provide participants with a deeper understanding of corporate financing strategies, credit evaluation and monitoring processes, key risk management considerations, and best practices in credit control. The session will also offer practical perspectives on optimizing cash flows, managing credit exposure, improving financial discipline, and aligning financing decisions with organizational objectives. The Members in Industry and Business Committee remains committed to empowering members through contemporary learning opportunities, thought leadership initiatives, and capacity building programs that address the evolving needs of the profession. Through such programs, we strive to equip our members with the knowledge and insights necessary to excel in their professional roles and contribute effectively to organizational growth and governance. Friends, you are very well aware that Committee for Members in Industry and Business is trying its level best to outreach to its members like anything. We do continuously organize the CFO meets. Very recently, we organized at the financial capital of the country, Mumbai, the Geo World Center. Last week only, the CFO meet, and in each and every part of country, we are trying to have the CFO meet so that we can outreach to the members in industry in the best possible manner. In addition to that, we are having very, very prestigious 40 under 40 award. We have launched this. This is the 5th year of that launching of that award, and we do identify 40 young chartered accountants up to the age of 40 years who have contributed in a great manner in trade and industry, and then we recognize them. We award them in a very, very prominent program of ICI. In addition to that, ICI awards. We are launching this ICI awards very soon, and the chartered accountants who have done really good in the trade and industry, we do identify those chartered accountants, and we recognize them in a very, very prominent award ceremony. So we are trying our level best to see that how we can try to bring the chartered accountants who have done really good on the forefront of the Institute of Chartered Accountants of India. Friends, you must be very well aware that we are having very, very prestigious growth gears, so in which we do have the interview of the most prominent chartered accountants who have done really good in various fields, whether it is the Piyush Goyal, who is the Commerce Minister, or whether the other chartered accountant, the Kumar Mangalam Bilda, was also the part of the growth gears in which we do interview them, and then it is telecasted on the G Business. So we are trying to see that how we can do something very, very concrete for the members in industry and business. And now the entrepreneurs are also the part of this committee. So I will request all of you to support the initiatives of the Institute of Chartered Accountants of India, to support the initiatives of the Committee for Members in Industry and Business, so that we can try our level best to fulfill the responsibilities which have been assigned to us for the members in industry and business. I will not be taking your further time, as we are very, very eager to hear our learned guest speaker. I am confident that today's deliberation will provide valuable learning and actionable insights for all participants. I encourage everyone to actively engage in the session and make the most of this opportunity to learn from our distinguished expert. Thank you and best wishes for a successful webinar. We are having CA Lakshit and what is your name? CA and Purva ji, who are supporting in a great way for the organization of these webinars for the members in industry and business. I once again welcome our resource person, CA Nilesh Sanghvi ji, and our very, very prominent leaders from Gautam Nagar branch, Sri Rakesh Vaste ji, Vice Chairman, Sri Saurabh Garg ji, Sikasa Chairman, Sri Ankit Gupta ji, Secretary, Gautam Buddha Nagar branch. On my right, we are having CA Mansu Agarwalji, very prominent chartered accountant, and all the respected delegates from each and every part of the country and outside country. Thank you very much.
Thank you so much, Anuj sir. And now today's webinar speaker is Nilesh Sanghvi ji. He is a chartered accountant with over 25 years of experience in credit management, internal audit, and corporate finance. Currently, he is serving as a vice president, internal audit across India and international offices. Nilesh sir, over to you for webinar. Thank you so much, sir.
Thank you, sir, for giving me this opportunity to present certain important tasks, certain important matters which can be useful to our colleagues, and specifically CA Dr. Anuj, CA Preeti Savla, CA Rakesh sir, and CA Saurabh sir. So thanks for giving me opportunity. We will start with the session, and will take about 1.5 hours, which may not be sufficient to cover everything, but I'll try to cover most of the important points which can be useful to our members in industry. So I'm just starting with. Is my screen is visible? Can I? Now it is visible, right? Yeah. So basically, it is basically corporate lending, and we have to see that corporate lending, corporate financing, and control for members in industry and business. So how this seminar will be useful? That one is that when the CFOs or when the members are dealing with the bank, when the entrepreneurs are dealing with the banks, what are the important points which is required to be taken care, as well as it will also be useful for the CAs who is having concurrent audit or any other audit with the bank. What are the important areas which is required to be seen into the corporate lending, corporate advances which we are having. So basically, it will cover the areas of critical areas in audit of corporate advances, credit appraisal, and sanction process assessment, common irregularities and red flag, end-use monitoring and loans and covenant compliances. Documentation part, what are the things which is required to be done? Stress assets and early warning signals, how it is, and what are the precautions to be taken? Key RBI guidelines and regulatory requirement, type of securities which is required by the bank for the funding, as well as from the entrepreneur point of view, what are the precautions to be taken, and pre and post inspection which is required to be done by the bank, and what are the precautions which is required to be taken by the entrepreneurs. This is a pre-disbursement and post-disbursement covenants which is generally levied by the bank, and what are the things and how it is required to be submitted, as well as how bank will take the precaution on that. Legal audit, what are the regulatory requirement for the legal audit and when it is required? VKYC, CKYC, and what are the types of mortgages? Financial commands for the bank audit if a concurrent audit is there. Technology and data analytics in the audit. Common regulator and inspection observation and practical case studies and best practices. And at the end, we can have a questions. So basically, what are the critical areas where the corporate advances is required to be focused? First is the sanction and appraisal. When the sanctioning authority and delegation of power, CMA data analysis, sector exposure limit and single borrower limit, credit rating migration, and internal external. So when a new proposal goes to the bank, what are the important things which is required to be seen is that sanctioning authority, whether it has been sanctioned properly, whether as a concurrent auditor person will see, or as a auditor needs to be look into that the authority who has sanctioned the amount is within the delegation of power. So it has to be ensured that the amount which is funded is within the amount within the sanctioning authority. Then next is the CMA data analysis. So CMA data analysis needs to be understand that whatever the projections has been given by the entrepreneur, that is in line with the business or not. So if 5 crores turnover is there today and projected expected turnover is 25 crores next year in 2027-28, that means it is an unrealistic turnover. 5 crores to 25 crore it is next to impossible unless and until there is some specific timelines, some specific parameters has been mentioned that they are going to get bigger contracts or how they are going to project the bigger amount of sales. That should be justified. Sector exposure limits and single borrower limits. So whatever the sector exposure limits, that is a different sectors are there where the textile is there, diamond market is there, and it is the sector of the film industry is there. So the different sectors are there. Where what is the total exposure limit and what is the single borrower limit is there. So bank might be having total exposure limit. Maximum amount of 15,000 crore has to be distributed for the diamond industry. So in that single borrower limit is getting fit and the total exposure is not exceeding. That also can be seen. Credit rating migration, that is internal and external, has to be seen. That internal rating might be better, but external rating might be deteriorated. So what is the reason on that? So that must have been specified in the rating sheet. Next is the disbursement and utilization. So once the proposal gets sanctioned by the bank, what are the disbursement and utilization? How it process? So pre-disbursement condition compliances will be there, like the disbursement, before disbursement they may ask that 25 crores or 25% of the margin has to be contributed by the promoter, or they may say that some current account with other XYZ bank is there, so that required to be closed. So that conditions has to be met, then only disbursement should happen. At the same time, entrepreneur should ensure that whatever the conditions has been provided, asked by the sanction, that has to be complied. Next is the end use verification of the term loan funds. So when the term loan has been sanctioned for some particular requirement, maybe project loan or maybe some machinery requirement, at that time bank sanction the term loan. So term loan has a particular way that if the amount is 25 crore, for example, and out of 25 crore is it has to be disbursed in such a way that out of that 5% or 10% amount will be contributed by the business and the balance amount has been contributed by the bank. So it has to be certified by a chartered accountant that end use has been utilized in a proper way, and it should contain the sources and application of fund. That sources says that from where the fund has came, that is, it is the promoter's contribution as well as the bank's contribution, and where that money has been utilized, that certificate has to be submitted to the bank, and bank need to ensure that certificate is right. It has containing UDIN number and all the data which has been there, which has been mentioned, it should reflect into the bank statement that this much amount outflow has happened, and whatever has been specified in the end use, that also should be inspected by the bank officer or can be done by external inspection and ensure that the amount has been utilized in a right way and there is no diversion of fund. Second point is on the drawing power calculation and margin verification. So there is, if any, it is required uh, for the CC limit. So there are several limits. So before I start, I also can say that what are the types of major facilities given by the bank is that one is a term loan, which we have already discussed, and purpose is already discussed. There is another part is the working capital limit. In working capital limit, that is a cash credit that is for the working capital requirement, and there is a non-fund based limit, that is a BG and LC and all that will be there. That will be non-fund based limit, which can be utilized for the purchase of the goods and that may be import or export. So drawing power will be required when the working capital limits are there and when the cash credit limit has been assigned by the bank. So in that scenario, drawing power every month, drawing power has to be calculated by the bank and it has to be ensured that it is in line with the sanction terms. So drawing power can be calculated by the current assets minus current liabilities, and by that amount, there will be some margin which will be reduced by suppose 25%. Suppose 100 rupees is the drawing power. Out of current assets minus current liability comes the 100 rupees. So whatever amount remains on that 25% margin is that, so 75% will be drawing power. That needs to be ensured. Overdrawn excess over limit position should be ensured. So wherever the overdrawn limit is there, suppose 5 crore is the limit which has been given by the borrower to the borrower, and the actual in account, it may be drawn 5 crore 20 lakhs. So it is an excess limit which has been drawn. That needs to be ensured. Security documentation part is to be ensured that once the limit gets sanctioned, the document should be executed as per the requirement, as per the RBI guidelines, as per the legal requirement. That is, if working capital limit is there, then hypothecation agreement will be there, working capital agreement will be there, and if any mortgage creation is done, then security is required to be mortgage. And if it is a private limited company, then ROC charge has to be created. So document execution, we need to ensure that stamping and registration part is very important. Insurance adequacy with the bank clause, that is, if any stock is mortgaged to the bank and if any collateral properties are mortgaged to the bank, then we need to ensure that the property has been insured, or the stock amount has been insured, sufficient amount of insurance is there. So that can be ensured on both the side, entrepreneur side as well as the bank side. Monitoring and recovery, SMA classification and credit reporting. So there is a norms from the RBI that if 30 days timeline is there, and then that has to be classified in a SMA classification has to be done. That is a 0, 1, 2. If 30 days is there, then 0. SMA 1 is 60 days, SMA 2 is 90 days. So what happens that if these things are classified properly, then it has to be reported properly. CRILC reporting also has to be done. So it reflects to any of the bank online, and they can find out that this account has been classified as a SMA2 or it is a NPA account. If it is crossing 90 days, then irregularity cross 90 days, then it can be classified as an NPA. Stock audit and inspection reports to be scrutinized properly, and provisioning adequacy IRAC norms to be followed. So that IRAC norms, there is a special RBI circular is there. So both the side it has needs to be ensured from the entrepreneur and the bank side. So next is the critical areas which is required to be looked into that. That is borrower selection. That is how bank will select the best borrower. That is verifying credit risk, track record, industry risk, promoter name, and CIBIL score of from promoter directors. These are the basic things which will trigger to the bank that this borrower is right, and at the center, and entrepreneur or director needs to ensure that this track record should not be spoiled. Suppose the check has been given and it gets bounced unnecessarily, there also CIBIL score will affected. Or if the term loan or any CC limit is there where interest has not been paid on time, or any credit card issue is there, then it will spoil the track. So track record needs to be ensured. Industry risk to be ensured. That's, for example, diamond industry or aviation industry. So bank don't fund to that type of industry. And from the entrepreneur point of view, also that needs to be ensured that wherever the profit, collateral, everything should be properly managed. Then things may work out. Financial analysis, audited financials for 3 years, CMA data, fund flow, cash flow, TOL ratio, debt service coverage ratio, all that ratio should be streamlined. Consolidated multiple banking में क्या होता है, lead bank responsibility, inter se allocation, no lien letter, pari passu charge, etc. to be ensured. Fraud monitoring में there are guidelines on the red flag account which is required to be ensured. Early warning signals guidelines are there. Swift controls and CBS reconciliation is the guidelines. Regulatory compliance में willful defaulter norms needs to be ensured. RFI identification needs to be ensured. Lookout notices are there. CRILC data submission is there. ECGC coverage for exports are there. Audit reporting में LFIR compliance, MOC compliance, previous year observation follow-up, RBI inspection commands, resolution that is required to be seen in audit reporting. Staff accountability, segregation of duties, rotation of policy, connected lending restriction. So staff rotation is very, very important, because if you say in the past that Punjab National Bank or they faced in case of Nirav Modi, or it may be there are so many other frauds which has happened, which is due to non-rotation of the staff. That is one of the base criteria which has reported. Report cases where credit appraiser is perfunctory risk rating overridden or without justification, or sanctioning authority exceeded delegation of power. So now what happens that I may be having 10 crores of power, but I am sanctioning 15 crores, then it is not, it should not be allowed. However, it gets disbursed basis that the amount has been sanctioned, and operations is also uh, sanctioning and disbursing. So what are the next point is a credit appraisal process. What is the major way how credit appraisal happens when the borrower goes to the bank and they required some amount of fund? What are the important criteria to be seen by the bank as well as entrepreneur, that how it is taken care? So main important part is a loan application completeness, KYC, PAN, GST, ITR, financial and bank statements that is required to be submitted. CMA credit monitoring arrangement data, that is for past 3 years actual plus 2 years projected. 2 years projected should be looks should be actual, it should not be exaggerated. Ratio analysis, that is the basically current ratio is should be more than 1.33. TOL, TNW should be in control. Debt service coverage ratio, if it is required term loan, it should be less than 1.5. Industry sector analysis, check if the sector is in the caution list or under restricted lending, like I have given example of film industry, or it may be of diamond industry. Banks are now not easily funding this type of industries. Management appraisal, promoter background, CIBIL check, RFA willful defaulter also takes place. Collateral adequacy, primary security coverage, collateral coverage, etc. to be looked into that. Credit rating also needs to be looked into that. Sanctioning authority, uh, that is the delegation of power, same thing, needs to be ensure that it has been authorized by the proper person. Then terms and condition, interest rate, margin, repayment schedule, moratorium, covenants, etc. needs to be looked into that. Board committee approval for larger exposure, credit committee, MC board minutes, that needs to be ensured for the larger exposure. If it is more than 2000 crore, committee approval is required. That depends on the bank to bank, what are the, how they are defining the criteria. So basically bigger exposure goes to the committee and the board. So next point is on the red flag. So what are the common irregularities in the red flag? How the it has been identified that account has been red flagged. So it is a evergreening, that is a fresh loan sanction near EMI interest due date to service existing debt, check date proximity. Which is what is evergreening? Evergreening means I have suppose 25 lakhs of rupees interest has to be paid on my loan, and I don't have money to repay that. So I have requested bank to provide me some ad hoc limit so I can manage. So bank has given me about 26 lakhs of ad hoc limit on the last day of the month, and I have paid that interest, what was due in my account. So that is known as a evergreening. So I have managed my loan to ensure that it doesn't get into NPA. So round tripping, funds disbursed and routed back to the borrower via third party accounts, verify end use with the bank statements. So what happens that I have one company in my employee's name, and I am sending it through them, that I have sold my goods over there or routed through some other borrower, and ensure that it has been came back as money has came from out of sale proceeds or some other way. So that is a round tripping. Stock inflation. So considering I have a 5 crores of CC limit, that is the cash credit limit, and I am showing 7 crores of stock. However, actual stock lying in my godown is only 2 crores. So that is a stock inflation. So book value of stock gets inflated. Fictitious debtors, by unnecessary I am building the debtors. Multiple banking fraud. Same asset pledges with multiple banks. Verify SARSA research and cross bank confirmation. This is a very important aspect when assets doesn't require to do SARSAI, or when the asset doesn't require to do registration. Like if you see in the Maharashtra and Gujarat, and some of the places in India, we need to do compulsory registration. Mortgage has to be registered. However, in certain cases like Delhi and Noida and other cases, they don't need any registration. So once mortgage is done, there will be two paper which is signed by the borrower, this is done. There is no stamp duty, only 100 rupees stamp paper is there. In that case, there were multiple cases were grown up into frauds. Then after SARSAI has came into picture, SARSAI has to be registered in that cases, and bank need to ensure that there is no other charge which is there on the asset before doing pledge. Overdue parking, interest debited and recredited same day, account shown regular artificially. So same day interest debited, same day credited on the, it happens in the overdue parking. Sanctioning irregularity without quorum beyond authority or to be connected persons. So sanctioning irregularity, that is without quorum, without, that is the same thing as a delegation of power. So misutilization of delegation of power, you can say. CRILC non-reporting, failure to report SMA1, SMA2 accounts to CRILC on time, deliberate suppression, valuation manipulation, property valuation inflated by non-empanel or connected valuer for high limits. So if I say to the bank that I need about 5 crore rupees, but however I have a property value of 3 crores, but somehow I can manage to the valuer that you inflate my property value to 6 crores, and valuer has given 6 crores, basis that I got a loan of 5 crores. So that is a valuation manipulation. So how it can be identified, how you can trap that. So you can see into, there are so many websites are there, 99 acres, makan.com. You can go through it and find out the what is the rate which is going on in that particular area, and basis that valuation is done or not. Wherever you find any suspicious, or where you find, if you can check it on a random basis, you can check it at that time. So these are the important points. So basically, next point is on the end use and so basically, end use monitoring and loan covenant compliance are the two important parts. So what is the end use monitoring, which I have already discussed on that, verify the utilization matches the sanction purpose, the plant purchase, construction, capacity expansion. In one of the case, I can give example is that in one of the branch I went and found that term loan of 20 crores has been disbursed. Then I told him, ki, there is no end use, nothing is available. I want to visit that. So it was nearby. So I visited that and I found that nothing was done before loan was sanctioned before 2 years. But nothing, there was no construction going on, and that was for construction of some project. So it was reported as a fraud. So it is like that key. We need to ensure that as a auditor need not to go, but as a we need to ensure that inspection is there on the record, photographs and other things are there. Depends on the project size. Lender engineering reports are available in the market, which may be some for a special hotel or some bigger project. Infra project also can be obtained. Obtain CA certificate for the end use of term loan funds mandated for limit of more than 5 crores. Working capital check if CCOD utilized for stated business, not diverted to associated concern. Maybe I have a CC limit of 5 crore which I have taken, and my business is textile business, but I have purchased 3 crores of gold because I know that gold prices are going to go up. Now dollar rate is also going up, so let me buy the gold. So that may be possible with the proprietorship partnership firms, which may be highlighted in the audit. That from the entrepreneur point of view, that should not be done because it is a violation on the RBI guidelines. Verify bills discounted are genuine trade bills, not accommodation bills, because what happens that many times business needs funds, and they come out with a suspicious company, shell company, and they generate suspicious bill. Then genuine trade bills are not available. Basis that they do discounting, and they utilize the non-fund limit, and that way they can manipulate the things which should be highlighted, because bills has a certain specific criteria how you can identify that this is a fake bill, like GST number and so many other things are there, which is a different subject which require special expertise. Cross verify fund flow from disbursement to actual asset creation, vendor payment. Check for diversion of funds used for non-sanction purpose, investment in shares, real estate, related parties. So there are very high possibilities for a firm where the industries are down and they misutilize the funds. Check for funds routed out of the business with no matching assets revenue. So what happens that sometimes funds are routed through other business. They have been given they send it to different companies, and from there it goes to the builder or somewhere they can get a higher rate of interest. So they park that way and they manipulate the things. So this needs to be very cautious in end use monitoring. Uh, Loan covenant compliance is these are the this has also been discussed that financial debt service coverage ratio should be 1.5. Current ratio is more than 1.33. So when you go through this appraisal note, when the sanction note you go through it, uh, automatically you will come to know that these are the things you can easily go through these ratios. If these ratios are not up to the mark, you can just highlight it and you can do deep diving in that particular account. From the audit point of view, from the entrepreneur point of view, they need to ensure that these ratios are maintained and there should not be any diversion, or wherever ratios are not proper, they can discuss and get it in a proper track. Reporting monthly stock data, stock statement, quarterly financial, annually audited balance sheet should be properly, timely submitted by the entrepreneur, as well as bank need to ensure that it is obtained. Operation, no change in the management without NOC on additional borrowing without consent. Insurance renewal before expiry, asset cover ratio, SARSAI updation, security, whatever has been obtained by the bank, which should be have an insurance. So it should be properly tracked and ensure that before expiry it gets renewed. Negative, no dividend without bank permission, no capital reduction, no guarantee to others, which should be part of the sanction terms. Affirmative, GST returns, regular statutory compliance, current maintenance of assets. Non-compliance must be reported in LFAR with specific account details. So if it is non-compliance, then it should be reported. So basic here I mentioned the audit observation as an example. Report all covenant breaches, missing end use certificates, and diversions, siphoning instances with account number, amount, and nature should be highlighted into the audit report. Then what are the documents which is required to be verified by the auditor, and what are the disbursement before disbursement? So sanction letter duly accepted by the borrower should be held on record. Demand promissory note as per the Indian Stamp Act. Then letter of continuity and general lien letter. Demand promissory note, nowadays it is a part of, they are not taking in some of the cases. So that is fine. It is covering as a part of the letter of hypothecation and pledge agreement for movable assets. Deed of mortgage, that is equitable or registered mortgage with a sub-register. Then personal or corporate guarantee deed with net worth statement. So wherever corporate guarantee is given or personal guarantee has been given, but if that guarantor doesn't have any net worth, then what is the use of that guarantee? So accordingly, personal or corporate guarantee should be with the net worth statement, which highlights that this is the net worth. If something goes wrong, then the amount can be recovered from the guarantor. Board resolution for the borrowing. So borrowing board resolution will be required that this is the amount of funding. If the corporate guarantor is there, then corporate guarantee is also required as a part of the document. MOA, AOA verification, that it needs to be done, as well as in partnership also that borrowing clause should be required. So from the practicing point of view, I can say that whenever we are drafting the partnership or MOA, AOA, we need to ensure that we put the borrowing clause, whether client is going to avail the borrowing or not, but we can add it as a part of the articles of association and partnership deed. So it will be easy in future if they want to take a loan. Tri-party inter-se agreement that in consortium or MBA arrangement is there, then agreement has to be entered by the basically lead bank. Yeah, there will be a trustee which will be appointed by the group of banks that the documents part will be executed by the third party who will be charging to the borrower that this much amount will be charged as a coordination between the banks as well as executing the documents. Revival letter, that is every 3 years as per the Limitation Act in multiple banking and consortium banking, revival letter should be obtained to ensure that if the limits are same, suppose 50 crores limit is taken from the 5 different banks and it has to be continued, the documents has been executed before 3 years and still that 50 crores limit is continuing, then revival letter will be sufficient that will indicate that my documents which has been executed by the bank is valid and it is live. So that is required on the bank record. Next is the CGTMSE, coverage, application, and guarantee activation. This is altogether a different subject and very big subject, which institute is definitely taking different steps on this, as well as different courses are also there. So I need not to explain in detail, but CGTMSE coverage and application and guarantee activation is required. So when bank is giving the loan to on the CGTMSE, guarantee activation is required. That guarantee number is there, and if it is taken over by the other bank, then that document should be also be ensured that guarantee number is obtained. That which guarantee number, if account goes NPA, account is stress, then amount can be recovered through government through that number only. So that should be also be entered into FINACL. Next point is on the insurance policy with the bank close endos. That is already discussed that fire, burglary, marine, WIBA as applicable, whatever the applicable policy is there, that should be on record. I will give you one example that in one of the case when I was doing audit, when there was a Venus Geyser was there. Venus Geyser was a borrower. I found that 20 crores loan they have taken, and insurance was 20 crore. However, when I have gone through the stock statement, I found that the stock amount is 45 crores, which is lying in his stock. So I have asked to the branch head that please debit that much 45 crores amount is required to be debited, because this much insurance policy is required. Only 20 crore insurance will not be sufficient. So basis that they have done it, and 45 crores insurance policy was brought on record. That borrower was shouting on the banker that how and why you have done like this, why you have debited my account, when my stock, I have taken only 20 crore amount of CC limit, cash credit limit, why you are taking 45 crores? I may be maintaining a stock of 100 crore, but then it was convinced to him that it is required as a banking rules and guidelines. Uh, After a month, I got a call from the borrower that the whole stock was burned out and fire had taken place, and they got about 90% amount from the insurance company. So these are the very small things. So it makes them insolvent. If 45 crores full stock gets burned, then it will be difficult. It may be difficult for the borrower to come out of that. So that is the main reason. So वो 20 crore लिया है तो 20 crore का stock ही जलेगा, बाकी का 25 crore stock will not have a fire. That will not be possible. Now, if fire takes place, it will take all the stocks. So that is very important. Undertaking for regular submission of stock and financial statement. That is a regular submission. Undertaking of for regular submission of stock and financial statement should be on time. That should not be delay. And if any delay is there, there will be penal from the bank, and it should be ensured that it is submitted on time. Comfort letter, subordination agreement, if applicable, that should be submitted. Comfort letter if it is required. Report all pending unexecuted document with account details. Each missing document is a separate LFIR observation. So if any of the documents which is not executed should be reported into the audit report. Okay. So there are non-fund based now. We can take a next point is on the documentation and execution of facilities. So LC is there and bank guarantee. So what are the LC requirement is LC application form with the counter indemnity, margin money receipt and FD lien marking, board resolution authorizing LC facility, underlying purchase order, performa invoice, import license, FEMA compliance certificate, accepted terms of tenor of LC, compliance verification, devolved LC, immediate classification as fund-based. Then BG application, in that bank guarantee, BG application with counter guarantee, board resolution for BG issuance, margin money, cash margin receipt, copy of underlying contract tender document, performance BG, financial BG, claim period versus validity period tracking, surface eye applicability verification, expired but unclaimed BG, liability reversal check. These are the small things mentioned in a very small slide, but it has a vast things which is required to be understand. And LC and BG is a very good product which can be understood and which can be utilized by the entrepreneur in case of need, as well as bank need to ensure on the document part, as well as billing performa invoice needs to be ensured that it is correctly recorded, and last thing is that margin money and the commission amount has been recovered by the bank needs to be ensured. Next point is on the next slide is on the stress assets and that is early warning signals. So there is challenges in identifying stress assets by the bank, what to watch for as an auditor. Now, financial EWS. So declining sales profit for 2 quarters, negative operating cash flow, increase in debt equity ratio, frequent ad hoc limits. So that needs to be seen. Once we see that, we need to report it into the report that profit is declining and there is a negative operating cash flow, increase in debt equity ratio. These are the all signals which indicates that the it may survive or not, or there may be some issue, financial issue with the borrower, which may trigger that it may be possible that loan may be repaid on time or not. It may get into irregularity. Operational EWS, so delay in project implementation, frequent changes in the business plan, management disputes, key personnel exist. These are the major issues which has been highlighted. When we find that in the appraisal note or when things are not getting moving for the project, then it may turn out to be a stress account. Banking EWS, that is frequent return of checks, ECS, CC account continues utilized at peak, bills not retired on due date, LC developments. बार बार अकाउंट इरेगुलर हो जाना या फिर पिक यूटिलाइजेशन, मेरा 5 करोड़ का लिमिट, आई एम यूटिलाइजिंग फुल लिमिट, bills not retired on due date. मेरा due date is 15th of June. I still not paid. Today is 19th June. I have not paid. Then it is I am saying to the bank that I will pay it tomorrow. That way it is delayed. So LC development is there, frequent LC development, that timely repayment नहीं हो रहा है. External EWS, credit rating downgrade हो रहा है, adverse media report में आ रहा है, regulatory action, industry downturn, GST return not filing. So like I will say, adverse media report, I can give example is that one of the borrower was having limit of 50 crores. But I have done Google on that, key whether what this borrower is doing, the name of the director. Then I found that he is in jail since last 2 years. But however, the EMI was coming on time. The amount, the cash funding and other things were on time. Then I found that some media, this case was going on and there was multiple charge which was on him. And account may turn out to be stress. So that has been reported into our report as a auditor, we need to report it, right? So next point is on the CBS generated EWS. That is a system generated SMA alerts, frequent debit credit entries near quarter and round sum credits before overdue date. So as an auditor, when you go forward, you can ask for the CBS generated EWS. That is a whatever the exception reports are there, you can ask out of that, you may get this type of reports where you find that frequent debit credit entries near the quarter and round sum credits before overdue date. So that you can classify and mention into your report. Market intelligence, that is stock prices crash, customer complaints, labor unrest, environmental violations, court orders. So these are the multiple things which you may find nowadays. There are so many ways you can find it easily through these sites. So that should be reported into the report. Now, SMA classification reporting. So SMA is 1 to 30 days is internal monitoring only, verifying tagging from the CBS day end process. So 1 to 30 days में अगर internal monitoring है, need to be ensured that the bank can follow up with the borrower and find out that what is the issue and how it can be streamlined. So that is SMA 0, 1 to SMA 1 is 31 to 60 days. That is reporting to CRILC, that is monthly. So CRILC data will go to across the bank. So he may say that I am having presently stress with one particular bank. He will approach to other bank and trying to get the money from other bank. But when other bank do the CRILC of that, they will find that there is already SMA1 account with some particular bank and he is trying to borrow from us also. So that is not acceptable. So that way it should be reported. SMA2, CRILC plus resolution plan, verify the resolution initiated within 30 days. So what are the auditor's verification point for SMA classification? That verify SMA classification matches actual overdue days from the CBS. Cross-check CRILC returns filed with the RBI. Check if the account restructure merely to avoid SMA and PA tagging. Verify if resolution plan initiated within 30 days of SMA2. check evergreening fresh loans, which I already discussed how evergreening done. Fresh loans sanctioned to service existing debt near due dates. Validate DPD count, system generated from day end uh, process, and verify date of NPA 90 days from the actual overdue. So, SMA classification, CRIL filing delays, and accounts where DEP-based tagging was overridden manually, and this needs to be ensured that this type of account must be highlighted into the your report. So NPA classification, IRAC norms. So we'll considering less of time, we will rush through. Standard is current that secured 0.40%. There is nothing to have a provision. And substandard NPA is more than 12 months. Secured में 15% का करना है and unsecured में 25%. These are already IRAC norms and NPA norms में it has already been given. So this can be gone through, and wherever doubtful is there, unsecured में तो 100% write off करना है. But when the CGTMSE is there, or any other guarantee or FD or collateral is there, that much amount has to be reduced, and the balance has to be charged as a provisional in the books of account. Key points: NPA date is actual 90th day, past due date, not date. Bank recognize it. Unrealized interest income must be reversed on NPA accounts. The interest charge कर दिया होगा, account turn NPL before 2 months. The 2 months interest should be reversed. Upgradation account can be upgraded from NPA only when all areas, principal plus interest, are cleared, not by rescheduling alone. Additional provision for secured NPA provision on secured portion of based on realized value of the security. Government guarantee advances, NPA norms apply. Provision needed if guarantee not invoked within the stipulated period. So it should be invoked in a particular period, and government guarantee should be wherever NPA is there, that much government guarantee amount should be reduced, that this much amount can be provision can be reduced that much amount, and charge that can be taken up with the government. Now next point is on the RBI guidelines and regulatory requirements. So there are different important RBI circulars has been specified here, which you may go through it. That is the IRAC norms, prudential framework for resolution of stress assets, loans and advances and statutory and other restrictions, master direction on frauds, classification and reporting, framework for dealing with the willful defaulter, large exposure framework, end-use monitoring of the funds and diversion of funds, central repository of information on large credits, master direction on KYC, VKYC, CKYC, PML Act compliance, power to issue direction to the banks, penalty provision for non-compliance. Verify banks' compliance with each circular. Non-compliance with any of the RBI's direction can attract penalty under Section 46, 47A of the Board Resolution Act. So these are the important circulars which should be gone through before we start the corporate lending audit. And from the entrepreneur point of view also, they can see into that they should not get trapped into any of these circulars. So otherwise it will be tough for them to move ahead through multiple issues. So next point is on the type of securities. What are the type of securities? So primary security is the hypothecation of stock and debts, charge on the plant and machinery, current assets, directly finance, stock statement, monthly plus TP calculation. So these are the primary security which is mostly required for the working capital facility. Collateral security is immobile property, FDR, NSC, LIC policy, gold, government securities, third party guarantee with the latest net worth. This has a different ways of doing mortgage for FDR, and different rules are applicable for the NPA provision and other things. So that can be looked into separately. It is also given into our institute's guidelines. Personal guarantee, promoter director guarantee deed, annual net worth statement verification, CIBIL score check for all the guarantors, guarantee validity and periodic renewal. So just I mentioned before a few slides that if guarantee is there, then net worth should be obtained. If there is no net worth of an individual or guarantor is there, if there is it is a negative net worth is there, then they cannot give guarantee. It's of no use of taking guarantee of that type of borrower. It may be corporate or individual. Corporate guarantee may board resolution is required, that company is authorizing to the board resolution. Here one more point is that MOA, AOA should also permit that it can give the guarantee. Net worth of guarantor company, guarantee value. Companies Act 185, 186 compliance needs to be ensured, and related party disclosure verification, which is now also part of the balance sheet, can also be looked into that. And it should be ensured that it is not coming into the statement of accounts. So, expired insurance, unregistered surcharge charge, tail stock statements, guarantee deeds without stamp duty, lien note marked on FD NSE. So that needs to be reported into audit observation. Stamp duty is also a very, very important part which needs to be ensured. It differs from state to state. Suppose I am taking a loan in Mumbai of 25 crores and I have to pay stamp duty on that. So what I have done is I also have an office in Delhi, and Delhi doesn't have stamp duty. So I will tell bank to execute my documents at Delhi. So I will save on my stamp duty. So that way, good amount of stamp duty can be saved. But however, from the auditor point of view, they need to look into that the proper and correct amount of stamp duty has been recovered. Next part is on the security verification checklist. How you can verify the security is perfect or not. So for the stock audit can be done. Stock audit can be assigned to the chartered accountant firms where they can verify the slow moving, non-moving stock. They also find out that what is the insurance, what is the security, what is the drawing power, or everything can be covered in the stock audit. Book debts, age-wise classifications can be obtained and exclude related party disputed debts, reconcile with the GL. Immovable property, that is the title deed verification, registration, etc., should be seen. Valuation report should be more than 3 years. Every 3 years, valuation report should be obtained. Encumbrance certificate to be obtained, that is from the ROC, not from ROC, that is from SRO, that is a registered office for the properties, where we can get an encumbrance certificate, which also can be downloaded nowadays from the online. Drawing power, that is recalculated drawing power from the latest statement, verify margins, which is as per the sanction letter, 25% stock, 40% debtors, check overdrawn position. Insurance is adequate or not, that already we have discussed. CERSAI registration is required for all the assets. Like maybe it may be immobile property, it may be movable property, it may be for the current assets, it may be for the KYC now. See, KYC is also there where CERSAI registration is required. CERSAI has to be done for KYC documents also. So that needs to be ensured. ROC charge is created for wherever the securities are done, wherever the old charges are there, which is satisfied or not, that needs to be ensured. Yeah. Now, what is the pre-sanction and post-sanction inspection? That is needs to be ensured. So before funding to the any of the borrower, pre-sanction inspection will be done by the bank that visit the factory office before sanction, verify the existence, and basically to find that it is surviving properly and the genuine borrower is there or not. So from the entrepreneur point of view, they need to ensure that everything is fine, and they need to cooperate to the bank to provide all the details, as well as need to ensure that everything is in a working condition whenever they are visiting, the bank officers are visiting. Post sanction is like that after funding, suppose it may be project loan or anything, they need to ensure that visit is done. Bank need to ensure that site visit is done, and use certificate is obtained, physical stock verification and stock statement. So sometimes what happens that needs to ensure key technical guys also may be required to verify the stock. So that bank need to ensure that bank auditor may ask for the technical evaluation, technical person to accompany with them and ensure that stock is correct and complete and valuation is up to the mark. Check for a diversion of the funds, insurance validity and coverage of the check. Review project progress post inspection report filed in the loan. Assess adverse observations. Next point is from the auditor's point of view, they need to ensure that processing fees are recovered in line with the sanction letter and schedule of the charges of the bank collected upfront before disbursement. GST is charged on the 18% of the processing fee. Renewal fresh processing fee is verified. Revenue recognition in correct period. Generally, term loan doesn't have renewal fees, but working capital will have surely the fresh processing fees, except if it has not been specified in the sanction letter. Auditor can ask for it. Okay, there should be waiver or there should be nil approval. Should be held on record. Processing fee is it may be sometimes as per the schedule of charges, documentation charges, mortgage charges, all that are the charges which may be as per the schedule of charges of the bank. So that has been recovered or not, that needs to be ensured and it should be accounted. Lead bank consortium fees, when the one of the bank is lead bank, that may not contain in the sanction letter, but as per the schedule of charges, if that bank is acting as a lead bank, then there will be lead bank fees will be there, which is required to be recovered, which is generally not recovered by the bank. Auditor can see to it that it gets recovered and accounted. If it is not recovered, it can be part of the report. Document and legal charges, as per the whatever the fees, advocate fees, valuation fees, stamp duty, the ROC charges, revival letter, stamping, all that will be recovered from the borrower. So this is the point. Next is a critical red flag. Each item is a potential LFIR observation. Mortgage not created before disbursement, highest risk area in the bank audit. Now, if you see that borrower has committed that there are multiple issues when mortgage is done. There is a one is that when the account is gets takeover from the other bank, then that bank is saying that we have a property, we will mortgage you once you give us the amount. So one bank will transfer the amount, require amount, then due to the process gap, it gets delayed, that mortgage is not happened, but however the borrower is utilizing the fund. Sometimes borrower is giving commitment that we will do in next 3 months, we will ensure that will be created. However, it will not get created due to certain XYZ issues. One of the audit, I found that the mortgage deed itself was a sale deed, which was there. It was a Xerox copy of the color Xerox copy was there. But however, it was not noticed by anybody. So it was highlighted into the legal audit, but legal audit was also not verified by the bank officer. Then it was highlighted to them that this is the sale deed, which is Xerox. So why it has been not highlighted to the borrower and got the actual sale deed? Then borrower was having the confirmation from the bank that he has submitted all the documents and account turned out to be fraud at a later stage. So these are the small things which should be highlighted as a high risk areas and critical areas into your report, in our report. So title document not received or verified by the empaneled advocate, Sarsai search registration not completed prior to disbursement, insurance policy not obtained or bank clause not endorsed, ROC charge not filed, NOC from the existing lender not obtained, ECGC cover not activated, environmental pollution clearance certificates pending, end-use undertaking CS certificate not obtained before TL disbursement, KYC documents incomplete or expired at the time of disbursement, board resolution for borrowing power not verified, credit rating CIBIL not checked before disbursement. These are the very, very important points which has a detail. Each topic can cover about 2 to 3 hours time. And I suggest that before any of the bank audit, uh, whether it may be article clerk or whether it may be a person who is the bank audit from the entrepreneur point of view or needs to take care from the bank point of view, needs to ensure that these are the very important criteria which needs to be satisfied. And if it is not there, bank auditor should ensure that it is covered as a part of the audit report. Next point is on the post disbursement compliance is that financial covenants, when the sanction happens, then sanction letter says that after the disbursement, these are the criteria which should be satisfied by the borrower. That, for example, audited financials within 6 months of the year end to be submitted. Debt service coverage ratio to be maintained is 1.5. Current ratio should be more than 1.33. TOLT, TNW, that is a net worth ratio, should be maintained. Minimum promoter equity should be maintained. So these are the very important points. Insurance renewed before expiry date, asset cover ratio, Sarsai modification in any security. Suppose I am having a 5 crore loan. I have applied for a additional 2 crores of loan. Now my loan is 7 crores. So however, Sarsai is done for only 5 crores. So bank need to do Sarsai for additional 2 crore also. So total 7 crore Sarsai should reflect. In my Sarsai Chalan, it should reflect that 7 crores amount is there. If it is not reflecting, then auditor should highlight that. Valuation report not done on a timely basis, 3 years has been passed. Where in valuation report, you will find that lease period is there. Lease period might have been expired. So that all needs to be taken care of. There will be operational covenant which also required to be seen. So that can be ensured. Legal audit is the next point. Legal audit is required when the limit is fund-based limit is exceeding 5 crores, and if it is exceeding 5 crores, then legal audit is required. Fund-based facility. In fund-based facility, what happens that cash credit limit is there, and borrower has given the mortgage documents, and bank has mortgaged the property. So it has to be seen that title verification is done. 30 years पुराना जितना भी titles है उसका property का, that has been verified by the lawyer, and they have certified that title is clear, there is no issue in the title. EC should be checked, mortgage validity, stamp duty has been paid properly, surface I compliance is there. Then who has conducted this? This may be any XYZ advocate, but as an auditor, it needs to be ensured that it has to be done by the empanel advocate. Must be different from the advocate who prepared the documents. So if it is not from the empanel advocate, borrower can influence to that advocate to prepare according to their requirement. Second is frequency. That is a at a sanction renewal and periodically per bank policy. Title check, 30 years ownership chain, no pending litigation, proper succession, inheritance, partition status of etc. to be looked into that, and it should be part of the title search. Mortgage validity, equitable deposit of title deeds plus interletter registered, sub-register registration verified. That is a mortgage ka validity. So, is there any clause which is mentioned that mortgage is it can be done for 3 years or 5 years like that? Like in society registration, flat registration, it may be like society gives NOC, in that they mention that up to 3 years there is nobody, he cannot sell the flat, will not transfer the flat, but it should be infinite, that till the bank the borrower repay the bank loan, we ensure that the flat will not get transferred. That way it should be covered into the NOC. Stamp duty, adequate amount of stamp duty paid on the mortgage deed, loan agreement, guarantee deeds. So we find many issues in the stamp duty also, that also needs to be looked into, that in line with the state act. Whatever the state prevalence stamp duty is there needs to be ensured. Legal opinion, that is a written opinion on record, deviation noted and escalated to controlling authority. That should be there. And wherever the legal audit is pending or any adverse legal opinion is there in the legal audit report, should be reported into the audit report. Okay. So wherever the CC limit specifically is there more than 5 crores and the mortgage property is there, legal audit will be applicable. Okay. So now next point is on the VKYC and CKYC. What are the KYC regulatory requirement? So RBI master direction permits VKYC for customer onboarding. VKYC means video KYC, real-time video interaction with OTP based Aadhaar verification. So bank will call and ask for the verification of OTP. Live photograph will be taken, plus pen verification during video call will be done. Geo-tagging of the customer location is mandatory where it is located. Entire session recorded and stored securely for 5+ more years. VKYC allowed for individual customers only, not for companies initially. Audit, verify VKYC completion, system RBI compliant with the encryption. Incomplete VKYC equal to KYC non-compliance minus reportable. Here the problem is that when the borrower, when the when the bank's customer want to open account, when somebody individual customer is want to open the account and he is traveling, he want to open it immediately, he has a 2 days time, or he is not able to reach to one particular bank. So at that time, bank is giving video call and taking the Aadhaar based details, and they are opening the account. So this is the way they are doing. So from auditor's point of view, it needs to be ensured that the data is available with the bank. CKYC is maintained by the SARSAI. So that is a central repository. 14-digit KYC identification number assigned, mandatory for all new accounts since August 2016. Uploaded KYC data to CKY CRR within the stipulated time. Periodic updation is 2 years is a high risk के लिए 2 years, 5 years for medium risk and 10 years low risk. Re-KYC update PAN, Aadhaar, photo, address proof. Suppose it is my KYC is done before 2016. So when my re-KYC is due, at that time, they have to ensure that C-KYC is done. So they need to register with the SARSAI. Audit, verify KIN generated, check pending uploads, non-filing delayed C-KYC upload, that is a reportable observation. So if I found there are so many observations nowadays in the concurrent audit report is also there, bank audits, that C-KYC is not done because sometimes borrower is not cooperating, data is not available, so many other things happens. So CKYC is a major issue with the banks now, which is required to be reported when it is not done. Okay. Next point is on the what types of mortgages are there. So there are different types of mortgages are there. Simple mortgage is there, equitable mortgage, negative lien, and combination mortgage is there. Simple mortgage is borrower binds personally to pay, no possession transfer. Mortgage sales through court on default. So there is no requirement of document. Simple mortgage, one document agreement will be executed, and the borrower and banker will go into the SRO office, registrar office, and they sign the document that if anything goes wrong, will be property will be charged to the bank, and bank can recover it. Here, the title search, title documents will be remain with the borrower, and only agreement will be there with the bank. Here, the stamp duty amount will be higher than the normal mortgage. So that is 1% or 2%. So, however, the advantage here, simple mortgage, why it is done? The borrower will have a peace of mind. Ki agar tomorrow if bank will replace my important sale deeds, then where I will go to search. So rather than that, I will add a little bit more stamp duty, and I will relax having a peace of mind that there will not be an issue because that documents are lying with me, and I ensure that I have that. Second is equitable deposit, that is title deed deposited with the lender to create security. Most common in banking, no registration in notified areas. So second is the equitable mortgage where the title deeds, suppose I have one particular house, I want to mortgage it. So I will submit all the title deeds with the bank, and bank will do title search report and ensure that surface I and every documents are lying with the bank in a proper way, and basis that bank will execute one memorandum of understanding, memorandum of entry, or memorandum of deposit in Tamil Nadu, it says. So that way that gets registered in some of the state. It otherwise in some of the state like Delhi or Noida, they just put it into the file and there will be recital register for that. Recital register means they paste that copy of MOE where they sign it that this is registration is done, and this equitable mortgage is with the bank. So that needs to be ensured. Auditor can verify that recital register as well as ensure that all the documents which has been mentioned for the equitable mortgage in the title search report is obtained and updated in the register as well as available with the in record of the bank. Third is a negative lien and combination mortgage. Suppose I have 5 properties and I want to more take loan from the bank. And out of 5 properties, one property doesn't have one particular document. Sale deed is missing or something is there which is not allowing me to mortgage. So I have asked bank that you take my 4 properties on the mortgage. One property I can give it as a negative lien where you will have the just negative lien agreement. Property documents will lie with me, but I will not sell that document that property. That I can give it indirect guarantee by negative lien agreement. So that will remain with the bank, and that can be ensured, and the funding can be done by the bank, additional funding on 5 properties. That way it is in the record of the bank. Next point is on the Finacle commands. So what as an auditor required to be seen into the Finacle, that is a CBS software. It banks, Finacle has some banks using Finacle, some banks is using some different software. But majority banks are using Finacle. That's the reason the commands has been provided, which are the important command. That is a HACLI, that is a customer account inquiry, HACI, that is account customer inquiry, HACFIN, that is limit and DP inquiry, HADRI, that is document receipt inquiry. So there are different commands are there. In that one particular command is that HACLNQ, that shows the account statement. You can download the account statement, you can generate the statement, you can generate the complete processing fee and rate of interest details from the Finacle software, and ensure that the amount can be verified through it, that whatever is mentioned in the sanction letter is appearing into the Finacle system also, in the system also. Like I have been sanctioned 5 crore of loan. However, in the Finacle software, it is showing 6 crores loan which has been disbursed. Or I may be having 5 crore, it is reflecting 5 crore, but the rate of interest which is mentioned in the sanction letter is 2% plus repo rate that comes around 10%. However, in the system, it is showing 1% plus repo rate that comes about 8%. So there is a manipulation which needs to be seen, and wherever the differences are there, the auditor can highlight that. Suppose processing fee is mentioned as 25,000 to be recovered in the sanction letter. However, in the Finacle, in the system, I come to know that it is only 20,000 which has been recovered. So there is a shortfall of 5,000 which should be reported into the audit report. That why it is like that. So there are several things like export credit limit utilization. Suppose it is a LIBOR rate, or LIBOR rate is an old rate. Now SOFR rate is there. SOFR rate is not linked, then there will be 2% or 5% rate of interest which is getting charged to me. But if I add the SOFR rate also, my rate of interest will be 7 to 8%. So there will be huge amount of income leakage which you may find during the audit. So if it is, depends on the loan amount. If it may be $1 lakh or $30,000, or it depends on the amount of the loan. So that much amount of income leakage will get generated, because if SOFR is not linked or anything is not linked in the foreign FCTL, that is foreign currency term loan. So that way needs to be looked into that. Next point is on the technology, how it can be used in the audit effectiveness. That is a CBS data mining, that is a software, that is a Finacle or whatever the software bank is using, that can be data can be extracted out of it, and that can be utilized. Extract all account with overdrawn position of more than 7 days. Identify account with interest reversal entries. So interest reversal kahan pe hoga? The mainly interest reversal will happen in the cases where NPA accounts are there. If it is reversed other way, then why it has been reversed? That needs to be ensured, that needs to be inquired. List of all SMA 012 accounts not reported to CRIL. Flag accounts with round sum. You may find that 60 days overdue is there, but it has not been reported into CRIL. It has not been flagged as SMA2. Flag accounts with round sum credit near due dates. So that can be generated. Computer assisted audit can be that can be done. That is the idea for large volume transaction analysis, Benford's law for fraud detection in financial data, gap analysis between CBS and manual register, sampling using statistical tools versus random. So that can be utilized. Nowadays, AI is also there to a big support to the audit. That is the automated DP calculation, verification, AI-based early warning signal can be detected. Automated IRA classification audit can be done. Digital document verification. So one particular document is there. It has a separate, same type of format. It can be put into the AI, and that can be seen that all the clauses as well as it is in the standard format is there or not. If it is not there, it can be reported in the audit report. Dashboard and visualization. NPA aging analysis dashboard can be seen. SMA migration trend chart, top 20 borrower concentration analysis, sector-wise exposure heat map. So top 20 borrower concentration, if the same type of borrower is there and they are selling to the one particular borrower, particular party only, then that also can be highlighted. There will be country risk also will be there. Suppose nowadays, if export is there to Iran, Pakistan, or some of the countries which is delisted by the RBI, that should be highlighted properly, because there is a probability that money may not come on time. Top finding by the RBI, NABARD internal inspection teams. So, what are the top findings by RBI audit जब भी होता है, तो what are the basically NPA divergence, account classified standard by bank but identified by as NPA by bank, RBI, provisioning gap. So as I have told that it is managed account sometimes कि ad hoc limit देके उसको manage किया जाता है, या फिर it has not been classified by the bank properly, provisioning norms proper नहीं follow हो रहे, inadequate provisioning हो रहा है, SMA misclassification हो रहा है, weak credit appraisal, कि loan sanction without CMA data, inadequate financial analysis or missing credit rating. These are the very, very important points where you find something fishy. These are the triggers. Documentation deficiency, critical documents, mortgage deed, guarantee DP note not executed before disbursement. End use violation, term loan fund diverted to non-sanctioning purpose, no CA certificate obtained. Now, I have found that wherever the CA certificate is obtained, then also term loan are diverted and it has not been utilized. So CA, before we give a certificate, we need to 100% ensure that amount has been utilized properly. Otherwise, we are spoiling our name. Uh, because what happens that bank also verifies nowadays through different ways that the amount has been utilized properly or not, in spite of submitting the CA certificate. Inspection gaps, pre and post sanction inspection not conducted or inspection reports missing from files. Fraud delays, that is a red flag account has not been identified, it has been identified with the delays. Willful default, borrower identified as willful default by the bank, failed to initiate classification process. These are the important points which needs to be taken care during the audit. Next point is on the best practices for the industry and business, understanding banking perspective on corporate lending and risk. So basically, what are the strategy which needs to be adopted? Study your bank's credit policy manual thoroughly before starting the audit. Each bank has a unique delegation and margin norms. Maintain a checklist-based approach, that is LFR format plus bank-specific memorandum of charges are your roadmaps. Build independent verification skill. Don't rely solely on the bank MIS. Extract CBS data and verify NPA SMA independently. Understand banking terminology. किसी को पता ही नहीं रहता है. Specifically, when we send the article clerk or somebody that what is the IRAC, what is the CRIL, what is the EWS, what is the RFA. These are the each topic has a different way and understanding, and it is required to understand before we start the bank audit. Cross-functional knowledge, learn RBI circulars, Surface I Act, FEMA Companies Act, 185 and 86 applicability, attend banks audit seminar and RBI notification trackers, RBI previous years LFIR observation and RBI inspection comments, develop data analytics skills, network with experienced bank auditors, document everything, maintain working paper. Nowadays, it is very, very important because down the line, 2 years or 1 year, we don't know, something will crop up and in investigation, that particular auditor's name will come, that who has done the audit and why it has not been flagged in the report. So needs to be more cautious and careful while reporting anything. So a well-prepared auditor with checklist, CBS data access, and circular knowledge adds maximum value to the audit process. So how evolving condition change the audit approach? That is a rising interest rate, sector stress, inflation impact, export dependencies, supply chain disturbance, GST regulatory changes. These are the very important points where the bank audits is getting affected and needs to ensure that whenever the audit gets started, person should be aware that what are the changes and what are the market conditions. So accordingly, it will give an impact to the audit. So adapt audit procedure based on the current economic stress in the borrower's industry. Apply heightened security for the sectors under stress. So now we come on the case studies. So case studies contains, that is case one, we can say that evergreening of loan, that is already discussed. That is ABC Industries is there. CC limit 10 crore का दिया है. Interest due 45 lakhs on 30th March. Ad hoc limit 50 लाख का दे दिया है उसको 28 March को. And 45 lakhs credited to CC on 29 March from ad hoc limit. Interest debited on 31st March. Account shows regular. What is the audit finding? Audit finding says that fresh sanction used to service existing dues. So classifying as SMA2 NPA report evergreening in LFIR. So RBI reference है उसका Prudential Framework Part 4 asset classification should reflect true position. So whatever is there, that should reflect into the account and it should not be classified as a standard. It should be reported according to the account. Inflated stock statement, that is the next case study. So in that we have mentioned that XYZ trader is there and usko CC limit diya hai 5 crores ka, and stock statement shows the value of 8 crore rupees, that he is having 8 crore of stock in his godown. and उसका drawing power आ रहा है 6 crore. So drawing power I have already discussed, that is current assets minus current liabilities, that is what is remaining is the drawing power. So stock audit reveals actual stock only of rupees 3 crores. सो स्टॉक ऑडिट उनका हुआ. सो उसमें फाइंड आउट हुआ कि उसके पास तो स्टॉक सिर्फ 3 करोड़ का है, लेकिन उसका स्टॉक स्टेटमेंट बोल रहा है इट इज 8 करोड़. तो डिफरेंस इज 5 करोड़. व्हाट इज डिफरेंस इन 5 करोड़ इज द इन्फ्लेटेड स्टॉक. डीपी शुड बी 2.25 करोड़ rather than it is showing 6 crores. Account overdrawn by 3.75 crore over actual DP. Insurance cover only for rupees 4 crore. So there are multiple things which should be reported, and it should be reported as a fraud. Okay. So that is RBI circular is also there. Stock inflation more than 5 lakhs in the borrower accounts. Then third case study is on the fund diversion. So how fund is getting diverted. So one of the borrower is there, PQR Infra. Term loan 25 crore ka diya hai for factory construction. It has been given. Disbursement is done for 15 crore, released against the architect certificates. Architect is managed and certificate has been issued 15 crore. Audit physical inspection reveals construction only 30% is completed. Okay. So 30% of 25 crores is less amount. Bank statement shows 8 crore transfer to promoter's personal account. Rupees 3 crore invested in shares through demat account. Induced certificate from CA not obtained. Action, report diversion, classify as NPA, initiate fraud examination. So here the point is that whenever the project funding is there, any of the project funding, there are maybe suppose 20 project funding is there. So it is suggested that auditor may visit one particular fishy project that they find that end use certificate is not obtained or anything which is there, which feels that it is not up to the mark. They can visit that particular project by informing to the bank, or at the same time they need to see that if ND certificate is obtained, whether it is in line with the actual uh, outflow of the bank, is it tally with that, is the promoter's contribution is actually received. 8 crore is transferred to promoter's account, 3 crore invested in shares, needs to be looked into that seriously and should be reported as a part of the report. And multiple banking fraud. So how next case study is on the multiple banking fraud. That is LMN exports are there. CC of 8 crore with bank A. Okay. And Krilk data shows same borrower as a CC of 6 crore with bank B. Both bank hold hypothecation over same stock inventory. Stock statement submitted to both bank is identical. Combination limit is 14 crore against actual stock is only of 7 crore. So no interbank correspondence or consortium agreement. Action report as potential fraud under multiple banking misuse. So one of the case I will say that I found that in Delhi, uh, there is no registration requirement. So on it is a long years back, Vrindavan Homes Private Limited करके one company was there. So they have mortgaged one particular property in one bank, and uh, that property was there, account was running smoothly, but they have also have funding from the Union Bank of India and other bank also. So there was no exchange of information between the banks. So I requested that you get the exchange of information. So basis that they got the exchange of information because Union Bank was in the next building, and that particular person of the branch went there and got that, and they are saying that the same property documents are also available with that same bank. So then it was inquired, and that it was found that it was with 14 banks, the same property papers are there. So it was a color copies which was made by them and submitted to several banks. So that has detected the fraud. So same type of these things are there. Interbank correspondence is required. Needs to be very clear that what is the stock, what is the amount of funding is required to be done, rather than doing in isolation. Okay, next point. What CAs must develop for effective bank audit and credit risk management. So very important is the regulatory knowledge, that is RBI Master Circular and Direction. Then IRAC norms, income recognition should be perfectly followed. Surface I Act, FEMA, Companies Act, PML Act, and KYC, AML, CFT compliance. So these are the very small words, but it has a very deep meaning, and a lot of study is required to get expert on that. Second is financial analysis, that is CMA data preparation and analysis, ratio analysis, debt service coverage ratio, fund flow and cash flow interpretation, working capital assessment. These are the very, very important points which is required to be seen in data diving, as well as at the time of appraisal of any document, any particular borrower. Technology and analytics phase CBS navigation, data extraction using SQL, Excel pivots. SQL, many of the chartered accountants don't know. So that should be learned. Excel pivots, CAT tools. These are the very, very important points. Understanding EWS system and AI-based monitoring. So AI is going to be a very powerful tool, which should be learned properly, which our institute is definitely taking seminars on that, which can be helpful, very useful to the auditors. Practical audit skills, LFAR preparation and reporting, physical verification of stock, property, and assets, legal document review, mortgage and guarantee, communication with bank management and RBI. So these are the very, very important small words, but deep diving is required. So to get the quality in audit. Next part is in the LFAR, that is the key areas. That is a credit appraisal system followed, whether adequate sanction process, authority level deviation, rectification, documentation, that is a that we have already discussed, disbursement without preconditions, account wise with amounts, post disbursement monitoring and supervision adequacy, renewal review of limits, overdue renewals more than 12 months, renewals, there is a separate MI should be there with each bank. NPA identification, system versus manual verification, date of NPA. Nowadays, many banks might be having system issue, so it may not be giving correct identification for NPA. Income recognition, interest reversal on NPA, recognition on restructured, provisioning, SARSAI, ROC compliance is done. Insurance is properly done, SMA reporting is done, fraud identification, sector exposure, breaches. So these are the very, very important points. Comprehensive list of observation auditor must verify and report. So these are the list of observations which is given, where NPA date differs from CBS auto classification, account disbursed without complete documentation precondition, accounts where DP exceeds sanctioned drawing power, irregular drawings, expired insurance policy with the bank close not renewed, SARSAI ROC charge not registered on modification pending, legal audit not conducted for fund-based limit of more than 5 crore, loan covenant breached, financial ratios, reporting timelines, SMA account not reported, evergreening suspected, end use of term loan, stock audit not conducted, restructured accounts, valuation report for immovable property, guarantors, net worth not verified annually, guarantee deed expired. So this is a very, very important points which is looked and commented in the audit report. Same way, there are several circulars is there which can be gone through, which can be studied properly to understand the proper way of bank audit. Key takeaways for the bank audit is bank audit of corporate advance requires deep understanding of RBI circulars, IRAC norms, and banking operations. Independent verification through CBS data extraction is non-negotiable. Documentation is the first line of defense. Every missing document is a potential LFIR observation. SFA and PA classification must be based on actual days, past dues from the CBS day and use process, not manual intervention. End-use monitoring of term loan through physical inspection and CS certificates prevent diversion and siphoning. Legal audit for limits more than 5 crore is mandatory. Non-compliance directly impacts recoverability under surface I. Technology adoption, multiple audit quality and efficiency. Every observation must be documented with account name, account number, amount, nature, and RBI circular reference. Stay updated. RBI circulars evolve constantly. Subscribe to RBI notification tracker and ICI knowledge portal. The auditor's role is to protect depositors' interests through thoroughness and independence are paramount. So now these are the very important points. Now what is the last two slides are there on the key fact statement. So key fact statement is, what is the key fact statement? A key fact statement is standardized one-page summary of all loan, cost, terms, and conditions in simple jargon. Suppose I go to the bank and I ask for the particular loan. They have sanctioned 25 crores of loan to me, and they have issued me the sanction letter. But that sanction letter doesn't contain the required terms and condition, require details. That is, what is the term of sanction, what is the rate of interest, what is the processing fees, what is the timelines, so annual percentage rate, all that was not covering. So what RBI has come out with the key fact statement, that one circular it has come out that bank has to ensure that in the sanction letter everything should be covered. So a standard one-page summary should be there with the all loan cost, terms and condition in simple jargon-free language. Must be given to the borrower before executing loan agreement, include annual percentage rate, true all-in cost of loan, borrower must knowledge, understanding before loan sanction. KFS to be included as a summary box in the loan agreement. In a loan agreement as well as the sanction letter, it should be included. So borrower, there will be transparency between the borrower and the bank. KFS must contain unique proposal number, loan amount, interest type, tenure, APR computation sheet, complete amortization schedule over loan tenor, grievance redressal, all that detail should be there. It should be complied by all commercial bank, cooperative bank, NBFC, including housing finance companies, applicable to all retail and MSME term loan, and not applicable to for the credit card receivable non-MSME corporate physical lending. So what is the auditor verification points is KFS being issued for all non-retail and MSME loans since 1st October 24? Is KFS in language understood by the borrower? Is borrower's acknowledgement obtained before loan agreement? Are any changes levied that are not mentioned in the KFS? So these are the very important points which is to be part of the sanction terms and the agreement. If it is not included, you can mention as a part of your audit report and make it as a regulatory issue, regulatory point which is not covered as a part of the report. Next point is what it means and what auditor must check in that. No hidden charges. So basic purpose of that key, now I'm getting sanctioned, doesn't contain a rate of interest, 25 crores of term loan has been sanctioned. So today they've told me that it is 2% but reported, but after 2 months they will change it to 3%. I will not come to know. So there should not be any hidden charges. Any fees charged not mentioned in the KFS cannot be charged to the borrower. APR disclosure annual percentage rate must include interest rate, processing fee, documentation charges, insurance, legal charges, stamp duty, whatever is there, that all should be specified. Validity period, borrower get minimum 3 working days to review KFS and compare with other lenders. During validity, RE is bound by the KFS term. This is a cooling off window. Check if the bank is giving this time. Language requirement. KFS must be in a language understood by the borrower, not just English. If vernacular is required, provide it in a vernacular language. Borrower's acknowledgement is required on the KFS. Summary box in agreement. KFS must be physically included in the summary box in the loan agreement. Digital lending. बैंक नाउ डूइंग द डिजिटल लैंडिंग बट केएफएस सर्कुलर बोल रहा है कि इफ डिजिटल लैंडिंग गाइडलाइंस डिजिटल लेंडर्स मस्ट आल्सो कंप्लाई co-lending originating co-lender responsible for KFS issues, so it should be online also, it should be available and that should be complied. Penalty for non-compliance is it is a RBI non-violation. Non-compliance can attract monetary penalty and supervisory action from the RBI. So from the entrepreneur point of view, from the auditor point of view, from the bank point of view, it should be ensured that it is there and can be complied on that. So thank you, and I conclude here. So basically needs to ensure on the important points where auditor needs to ensure where from the entrepreneur point of view, what are the important points which needs to be ensured.
Thank you so much, Nilesh sir, highlighting about the insights on the common irregularities and red flags, critical areas on monitoring and recovery of corporate advances, end use compliances, and the practical aspects on the case studies. Nilesh sir, we have received some questions on the subject, and now these are being taken up one by one, sir. So question is related to this one. What are the GST implications for an individual who has received approximately 19 lakh as subcontract oblique professional fees from a client in the USA, and rupees 8 lakh as professional fees and other income from the Indian sources. Sir, please guide on this, sir.
So, can you please clarify the question? Because the fees has been received, that is fine. But what exactly the question is?
Sir, basically they are asking about the GST implications for an individual who has received 18 lakhs as subcontract of professional fees.
Uh,
Excuse
just 1 minute. This is basically GST question. I will not be able to answer because GST was not a part of it. It was basically on the corporate lending and other things.
All right, understood, sir.
Yeah.
And second question is, how important is the documentation in the audit of corporate advances, and what are the key documents that auditors should verify? Can I repeat, sir?
Yes, I heard the question.
All
So,
right, sir.
documentation is a banking it is like a seat belt in the car, and you do not appreciate it until the accident happens. So, when a borrower defaults and the bank wants to recover its money through surface I or court proceeding, the first thing is documentation, which is very important and which plays an important part. A missing stamp, an unsigned deed, an unregistered charge can cost the bank crores. So must have a document, sanction letter accepted by the borrower, demand promissory note, letter of continuity, hypothecation agreement, that is the insurance policy with the bank clause. Each of them must be before disbursement and not after. Must have documents on letter of credit if it is LC or anything. Bank guarantee BG applications and other documents should be obtained. Stamp duty should be verified that a mortgage deed stamped at rupees 500 when the stamp duty requires 5 lakhs makes the entire document as a legally unenforceable. The auditor must verify the stamp duty based on the state where the property is located, and revival letter should be held on record if the 3 years has been passed. CERSAI and ROC registration is done properly, so that needs to be ensured. So that's it.
Thank you, sir. And next question is, what challenges do auditors typically face in identifying stressed assets and early warning signals in corporate loan accounts?
Basically, the identifying stress in the loan account is like a reading early symptoms of disease. The sooner you catch it, the better the chances of recovery. The challenge is that borrower and sometimes even bank officials try to hide the symptoms. So why it is difficult? The biggest challenge is the information, and the borrower knows their business is struggling, but they submit rosy stock statement and optimistic projections. The banker under pressure to show low NPAs may not prop too hard, and the auditor comes in once a year and has to cut through all of this in a limited time window. So it is difficult. Financial warning signals, declining sales for 2 or more consecutive quarters, shrinking profit margin, increasing debt to equity ratio, negative cash flow operations, frequent request for an ad hoc limit or enhancement. If you see this account is under stress, even if it is technically standard, and bank warning signs are there. Cash credit account continuously running at its peak limit, frequent return of checks, LC development, and interest being paid by taking fresh loans. External warning signs is credit risk, that is downgraded credit rating, adverse media reports, regulatory action against the borrower, promoted dispute in public, labor unrest, environmental violations. So these are the external signals. What is the specifics? What the system should do? Bank have early warning signals. System in their CBS. This system auto generates alerts when certain triggers are hit. An auditor check whether these alerts are being generated and more importantly, whether anyone is acting on them. An alert that sits in the queue without action is useless. So this should be reported that way. So hope it is clear.
Thank you so much. The next question is, how can technology and data analytics enhance the effectiveness and efficiency of audits relating to corporate advances?
So
नीलेश जी,
हाँ जी,
ये अपनी स्क्रीन बंद कर लो, थोड़ा अच्छा व्यू आ जाएगा.
okay. Yes. So this is already been covered in the presentation, and it is
आपका वीडियो ऑफ हो गया? हाँ,
okay.
वीडियो ऑन कर लीजिए सर.
हाँ, 1 minute. Yeah.
थैंक यू.
Sir, shall I repeat the question again, sir?
No, 1 minute. I
All right.
saw the question that
Okay.
how you mean to say technology and data analytics enhance the effectiveness and efficiency of the audit. That is what you asked. So I can say that gone are the days when the bank audit meant sitting in the branch with the stacks of files. Today, the real power is in data. So if you query the CBS, that is a banking system, that is a core banking system, then data intelligently you can find in 10 minutes what would take 10 days manually. So CBS data mining asks the bank for data dump for all corporate advance accounts, then runs simple queries. Which accounts are overdrawn beyond the sanction limit? Which CC account has been running at peak utilization for more than 30 consecutive days? Which account had a large credit just before the interest due date? These queries will point out the problematic accounts, and automated DP verification should be done. That drawing power is sufficient and it has been utilized in a proper way. Compare your DP with the bank's DP, and any significant gap should be highlighted. And statistical analysis should be done where it has been found that more than 30% cases where the stock statement has been delayed or the amount has been fully utilized should be stress test. That account should be ensured that inspection and other things are properly done. SMA, NPA verification from CBS, that is extract DPD data from the CBS data, and 90 plus DPD should be analyzed properly. Dashboard approach should be ensure that create a simple Excel dashboard showing for top 20 accounts with exposure in a sector wise and which indicates the concentration risk and SMA migration trends and NPA aging analysis. This can help the present your finding to management in a way that makes a impact. So use CBS data extracts independently, verify NPA classification, DP calculation, and SMA reporting. So that is basically that can be utilized. That is the major areas where you can find more.
Thank you, sir. Next question is, if the loan amount is more than 5 crore, the bank oblique lender needs to register with both the databases or just CRILC. Also, in this only for corporate loans or high value personal loans are also included.
Personal loans, last point you need to repeat. What is the question?
Sir, also is this only for corporate loans or high value
This is
personal
only for
loans also?
corporate loan. This is
Okay,
for
sir.
corporate loans.
Okay, sir. And first question in this, there are two questions in this question. If the loan amount is more than 5 CR, the bank lender needs to register with both the databases or just CRILC?
CRILC.
Thank you, sir. Next question is books to be referred, where we can find observation for type of bank audit observations shared in case studies.
There are several books which is available. One of the book is I can say uh, our bank audit guidelines is the best. That is one institutes which is getting published. Second is that there is a Manoharan book is also available in the market. which is sufficient, which covers majority case studies, which can be useful.
Thank you, sir. Next question, what best practices would you recommend for chartered accountants working in industry and business to better understanding the banking perspective on corporate lending and risk assessment?
The basically, it is the bank's policy, bank's credit policy can be read. Use the LFR on your roadmap. Build independent verification skill that never relies solely on the bank's MIS reports. Extract CBS data. Recalculate DP independently on a random basis. It may not be possible for all the data, but randomly it can be checked the drawing power. And use certificate, as discussed in the PPT, that it can be verified properly. Independent verification adds the value. Stay updated with the RBI circular. Learn, that is a CBS navigation, that is a Finacle or any other software is there. Auditor should know that how it is required to be operated and what data can be extracted out of it. And network and learn, that is a join, that is a basically study group, or understand that more seminars can be attended, bank audit seminars as well as discussion with the chartered accountants can enhance the knowledge. That is what.
Thank you, sir. Is CRILC applicable for NBFC loans also?
FCNR loan. That is applicable to NBFC, no. No.
Okay, sir. Thank you, sir.
Yeah.
Last. What key skills and knowledge areas should finance professionals and chartered accountants develop to strengthen their understanding of bank audits and corporate credit risk management?
Bank audit is a specialized area, and to do it well, you need a specific set of skills that go beyond general auditing knowledge. And here, I can say that a regulatory knowledge is must. And basically, what we have discussed in the PPT, that RBI circular, Surface I, FEMA, all that auditor need to keep on learning, as well as go through the documents, online availability of knowledge. Financial analysis, be comfortable with the CMA data, ratio analysis, fund flow statements, cash flow analysis, learn the NAIC committee norms for working capital assessment. And these are the tools the bank uses to decide how much to lend. You need to verify the bank, because sometimes by looking at the CMA data, it may be not clear that what is required to be done. So auditor should understand how CMA data is getting prepared and what are the important points which is required in that. Technology skills, that is learn to navigate, that is a system, whatever is CBS or Finacle system is there, that needs to be understand. Get comfortable with the Excel and pivot, VLOOKUP and conditional formatting. CBS dump into meaningful analysis, which can be done. SQL language can be learned. Documentation and legal language, that is understand the basic of the Indian Stamp Act and Transfer of Property Act and Companies Act. These are the very, very important. And so not a lawyer, so need to know the document incomplete and improperly executed document can be learned by that way. Communication skill, finding only useful even in communication, effectively write clear and specific things, and avoid vague language like certain accounts were found to be irregular. Instead, write account number so and so was found to be irregular, and these are the issues which was found. Professionally, this has to be understood. This is perhaps the most important skill. Do not take anything on the face value. If the stock statement shows 10 crore, verify it. If the branch says the inspection was done, see the inspection report. If the borrower says the money was used for construction, visit the site. The auditor who trusts and verifies is always more effective than one who just trust and vouch it. So basically, don't go on the face value. That is the message. So these are the important points.
Thank you so much, sir. on the subject. Now I request Ankit ji for vote of thanks. Let me say something about about Ankit ji. Ankit Gupta ji is a chartered accountant with over 14 years of experience in audit, taxation, and advisory services. He is presently Secretary of Gautam Buddha Nagar branch of CIRC of ICAI. Ankit ji, over to you for vote of thanks. Thank you.
Thank you, Saurabh ji. On behalf of the MIB committee ICAI, I extend my heartfelt gratitude to all of our distinguished dignitaries, speakers, and participants for making today's webinar on bank audit for corporate advances truly insightful and successful. A special thanks to our brother CA Dr. Anuj Goyal ji, Chairman, for his visionary leadership and valuable keynote address. I would also like to express our sincere appreciation to CA Rakesh Vasne ji for his opening remarks, our esteemed speaker CA Nilesh Sangvi ji for sharing such practical insight and deep knowledge on the subject, and our moderator CA Saurabh Garg ji for conducting the session so smoothly. My gratitude also goes to the Secretary of the Committee, CA Anita Suneja ma'am, and the entire organizing team, technical support staff, and everyone for working behind the scene, whose efforts ensured seamless execution of the seminar. Lastly, a big thank you to all of the participants. Your presence and engagement made this session meaningful. Thank you.
Thank you, Ankit ji, for vote of thanks. Thanks a lot. Now, today's webinar will be available on ICI TV after 2 working days. This is information for all the participants. Thank you so much for today's webinar. Thanks a lot. Thank you so much.
Thank you. Thank you.
Thank you.
Can we conclude?